late 2012 that the suppression of gold and silver prices would have a quick effect on silver and gold mining output. Namely, how much do the silver miners in Canada produce each year as an aggregate? How much do the U.S. silver miners produce per year? How much does Mexico produce per year? That's called the silver mine output. Okay, I got something wrong though, Elijah, and I never really mind delineating errors because they're interesting. They point out a lesson. And fortunately, I don't have too many, so it's not too many lessons I give. But aside from that, why has the silver output in 2014 and 15 not been way down? And the answer is many-sided. And this is the learning that I had to do. Gee, I got that wrong. What went wrong? What part of the analysis went wrong? What went wrong is the expectation of an immediate response. What went wrong was a lack of complete understanding or more thorough understanding of the contract nature of the mining industry. It has turned flat in the last year, but in 2014 and 15 it continued because they're bound by contracts. They've got long-standing contracts. They might have a 5 or 6 or 7 year contract. The contract has to do with rental of equipment, with leasing of a property, with hiring of people, with executive contracts for engineers and VPs and whatever. They must continue. They don't really have the opportunity or the option to say, well, in view of the silver price being low and suppressed, we're going to violate these 16 contracts, and we'll just hope for the best in the court system. No, they don't act that way. Okay. They also have, mining firms must continue to pay down their debt. And this is really a big factor. They've got long-term debt. So how are they going to make the payments in the next quarter for the debt if they shut down an operation? And therefore, they are willing to sell under their cost at a loss. Well, that's like saying, I'll work in the field, but I won't be able to make enough money to feed myself just so I can make my monthly revolving credit card payments. Okay? That's the micro example. They've got long-term contracts, maybe even to supply the COMEX. There's competition among these miners, and many years ago there'd be competition where the COMEX would say, well, we have an opportunity for 3 suppliers here, and there may be a few more than that vying for the slot. So a mining company would say, well, we'll guarantee to supply you there for the next 8 years. Okay, the revolt has started though, and I give a lot of credit to Silver Majestic. They actually held back on, I believe it was about 30 or 35% of their silver output from mining operations, held back and did not sell it to the COMEX. What they did was they managed to take care of their debt situation, but held back on about a third of their silver and put it into their own inventory as a savings account. And what they're saying is, very boldly, you're not giving us a proper price. We're going to hold it in inventory. It's worth a lot more. We're going to use it like a savings bond, but in metal. And we think this is going to be worth twice as much in the future years. That's a very bold statement. I thought that there were going to be threats, and there actually were threats. The Wall Street bankers threatened the CEO of Silver Majestic, and he basically told him, bug off. So very interesting dynamics there, but the mining companies just can't declare a strike like they want to. They're too indebted, and they're too obligated with contracts.
So do you see, I was going to ask you, I was going to first talk a little bit about what you said in your article about the gold and silver manipulation. And so you said in your article, the banker cabal wishes to defend an indefensible 1,300 gold price and to defend an indefensible $18 silver price. They will fail, but not before throwing billions of dollars of unbacked, unsupported counterfeit contract paper at the market. So I was going to ask you, are you saying they will eventually fail in the future, but they will be able to, for the meantime, halt the coming breakout in precious metal prices?
Well, yeah, they have been succeeding in delaying the breakout for many years. So it's not a big question of how do they do it. The question is, how long can they get away with it? They're doing the same thing they've been doing for years. So, yeah, they're going to delay the big move. And, I thought that there was an outside chance that they would let the gold and silver prices move after April 19th so as not to piss off and anger the Chinese. And they did it anyway. $2 billion of paper gold on a single day were thrown at the market to prevent it from going over 1,300. $1.5 billion of paper silver was thrown at the market in a single day to prevent it from moving, flying past 18 toward 20. If they didn't suppress it, you'd see $1 and $2 moves in silver every single day. So the question is not, do they have the ability? The question is, why do they continue doing it when it is angering China? China has come out with public statements saying that they will not tolerate the suppression of gold and silver as in the past because China owns so much gold and silver. China would like to, for instance, use more of its gold to relieve pressure on its banking system. But if they don't have a fair price for gold, they're not going to commit the gold as collateral in loans like that. They would much rather commit the gold if we had say a $3,000 or a $5,000 price. Then they commit some gold, get some leverage against it, relieve some of the debt pressure, and move forward. But they're waiting for a proper gold price. They're waiting for the West to stop their corruption. And it's a long wait. I think the banker cabal has always succeeded in their delays. But angering China is going to motivate a trigger. The West is out of gold. That is the big issue. For the last 2 years, London and New York has been relying on the Vatican and Basel, Switzerland, which is the Bank for International Settlements. The Vatican and Basel have been kind of emergency suppliers. And what I'm hearing is they're not willing to do it much anymore because they're realizing that whatever they release from their vaults will never come back, and it's not getting a really good price. So after a while, like these last few years, Basel and the Vatican have concluded we can't play this game anymore. It's not in our interest to play this game anymore. We're not getting a proper price ourselves in the sale and lease. They don't come back. They're not they're officially leases, but they don't come back. If you lease your car imagine leasing your car. You've got, 3 Mercedes and you decide I really only need 2 and maybe only 1, but I'm going to lease the 3rd one. Imagine what happens if you lease it to John Smith on the other side of town and he sells it. He sells it. A leased Mercedes. The violation is so stark that people laugh, but when it comes to gold, they don't. They say, oh, well, it's just gold. It's just money. It's just, financial object, an asset that doesn't earn a yield. What a bunch of rubbish. Okay, we're coming to the end of the game, and it's going to be extremely interesting to watch. We got enormous amount of global gold demand, while they're running out of direct interest and demand for the dollar. I heard a story 2 years ago. It came from Cato, and it was verified by The Voice. Cato is my military and government source for the U.S. He's got Army experience, or other experience beside that. He knows a lot of people. He did projects for the Langley folks. He knows Homeland Security. He sits on their board. But what he told me was, and what the Voice verified, was that starting in about 2012 and 13, central banks were dumping their treasury bonds on the side, and they're doing so at a 30% discount. Wow, what does that mean? It means the dollar's going away. It means that the indications for the dollar vanishing act or retirement or demise, the indications were there a while ago. And in the trade payments, I think you're seeing some confusion right now. The Western press likes to say that the shipping industry is a mess because there's so little trade going on, so little commerce going on. But there might be another angle to this. It could be that the shippers, the ones who are loading the ships with containers full of television sets and car parts and various things, it could be they don't want the dollar anymore in payments. So the Western press, which is run by the bankers and the cabal, they come out with the stories that, well, it just, economic situation is a little bit deteriorated, so the shipping is less. No, they don't want the dollar. That's mixed in with the story. So a lot of things are happening. They can delay and delay, but the one certainty here, Elijah, is they cannot delay much longer. It's finite. The supply of gold and silver is finite. The patience is finite for the dollar. And with all the wars, it's becoming quite clear that the wars are to discourage those who don't want to play the dollar game. In Ukraine, you've got discouragement for joining Russia with Europe on gas supply. Eventually, Russia would not demand the dollar for the energy supply, whether it's whether it's gas or oil. In Syria, it's to obstruct cheaper Iranian gas going to Europe. So Europe is obligated to pay the Arab LNG and higher priced gas. So that war is to make sure Europe pays a higher price for gas, natural gas. Okay, these are all the dollar wars, I call them. And the global participants, they notice these things, and they realize, my gosh, we're seeing war to defend the dollar, which was a 2004 and 5 forecast of mine, called stupid by a lot of people. But, the funny thing about forecasts, Eli, is even when they go correct, when they turn correct and it's rather clear, you really can't say, well, I've demonstrated that to be a correct forecast. And the clowns out there, the dummies, they don't even know how to detect a correct forecast. So I don't really care about them. I don't care about the ones out there with the 90 IQs like George Bush and his family. Interesting times, but Deutsche Bank's in the news here, Eli, and this could be a giant crowbar.
Definitely, and I was going to ask you about Deutsche Bank. About 2 weeks ago, Deutsche Bank agreed to settle on U.S. lawsuits accusing them of gold and silver manipulation, and this is from Reuters. Quote, the plaintiffs accused Deutsche Bank of conspiring with Bank of Nova Scotia, Barclays, HSBC Holdings, and Societe Generale to manipulate prices of gold, gold futures and options, and gold derivatives through twice-a-day meetings to set the so-called gold London fixing. They also accused Deutsche Bank, HSBC, and Scotiabank of a similar conspiracy to manipulate silver prices by rigging the daily silver fix. So, do you think with this coming out, it seems like this is pretty much proof that what you've been saying all along of that the banks are manipulating the gold and silver prices. It seems like this is pretty much proof that that's the case. And do you think because of this lawsuit, in the mainstream media, do you think, the manipulation of gold and silver prices are really becoming mainstream knowledge?
Yeah, it's trying to work into mainstream knowledge, but if you were to ask 100 people sampled on the street, what's the London gold fix? I think you'd be lucky to find a single person who knew what the heck it was. So, working its way into the mainstream news, you really have to say into the mainstream, say, financial news of, say, stock investors who check the investment pages in the financial news and the economic news. Out of 100 of them, what percent might know what the gold fix was? Well, you might find 10 or 15% in that, but you don't find a majority. I don't have a single friend back home who knows what it is. I don't even have very many friends back home in the U.S. who know the dollar is used in international trade payments. So the level of ignorance is astonishing. But back to Deutsche Bank, what's important about this? The first thing that is important about this is why are any of these events happening with respect to Deutsche Bank? Okay, Deutsche Bank is a failing bank. I did a story, I think it was back around January, could have been December, right around that time frame, in the Hetrick letter. There was a really adept analysis done on the balance sheet of Deutsche Bank and what their true value as a corporation might be. And the conservative estimate was minus $200 billion. And the writer analyst said, if I were to use the ratios from back in the Lehman time, 2008 and 9, and some resolution for them, you would see that my error was 2 to 3 to 1. So, after the dust clears on Deutsche Bank, the losses might be on the order of $500 billion for Deutsche Bank's negative worth. That's one reason that Deutsche Bank is coming out into the open as a news story. But there's a bigger overarching question. Why isn't this all being kept quiet? And I think the answer is China has told the West, clean your banking system. Clean out your insolvent banks. Clean up and break up some of these giant banks that are holding things together that are hollow giant reeds with no mass. Okay, the prescription formula for a bankruptcy is insolvent plus illiquid. You've got negative worth, you've got more debts than assets, plus illiquidity. You don't have enough money to cover the payments and all the obligations. So insolvency plus illiquidity equals bankruptcy. The real motivation for QE in 2009, the hypermonetary inflation, the quantitative easing to cover the debts and for the U.S. government, finance the government debt, to cover the redeemed bonds, not just mortgage bonds, but treasury bonds. Notice that the first action in 2008 came with the TARP fund came to handle mortgage bonds. The second action came to cover the treasury bonds. So what were they doing? They were making sure that all liquidity demands, liquidity requirements were met. Remember the phrase, oh, we have another alphabet facility thrown in the pile. That was the Fed, the Federal Reserve, coming up with yet another liquidity facility in order to provide cash to the system, to keep liquidity fires moving, to keep the channels full and flush, to prevent the bankruptcy of the Wall Street banks. It had very little to do with U.S. government finance, but that was also a big motive as well. Oh, my goodness. So you had the LIBOR fraud out of Barclays, and Deutsche Bank was party to that. You had statements 2 years ago that their perhaps liabilities of over $1 trillion for these banks because of all the adjustable rate mortgages that were set throughout all the Western nations, improperly set. Not a single giant lawsuit with restitution. They don't even know how to do the restitution for the LIBOR fraud. What are you going to do? Line up all the different Americans who have an adjustable rate mortgage and give them an extra $200 a month, or $115 a month, or even $80 a month over a long-term contract that stretched 8 years, and then go back for all the older contracts with sold homes and redeemed, paid off mortgages? They don't even know how to do that. So they didn't do anything. Well, now in a related case, not the LIBOR with interest rates, London interbank overnight rate is what LIBOR means, and there's a Euribor for European, not London. So now you have Deutsche Bank being forced to admit that they committed fraud in the gold fix, in the gold market, manipulation of prices. Who ordered them to do that? It certainly was not the U.S. Department of Justice. There's no justice in the U.S. Department of Justice. There's only cover-up. So I think China ordered them to clean house. Okay, this is very big because Deutsche Bank has the potential to bring down the entire Western banking system. Well, that's a rather sweeping statement, Jim. What do you mean by that? Well, what I mean by that is that Deutsche Bank has their hands in every single aspect of Western banking. Now, I can only name a few because I don't have the complete list in front of my face, but they're involved in mortgage bonds. They're involved in LIBOR. They're involved in gold. They're involved in commercial credit with industries. They're involved with holding Southern European, the pigs' sovereign debt. They're involved in not just the gold, but the silver market. They're involved in the high yield debt. They're involved in the energy market debt. They're involved in everything, including the massive derivatives, which are on the order of, I don't know. Is it 700 trillion or is it 1.4 quadrillion dollars worth of? I mean, it's just amazing. They try to redefine what the derivatives are so they could bring down the estimate of the notional value of all the Western banking system derivatives and say, no, it's not over a quadrillion. It's only 700 trillion. Okay. Most of the financial press readers just look at the headlines and the indexes. So you're not going to get a lot of public awareness from this. I don't really care about public awareness. What I care about is upcoming fractures. I care about a stack of lawsuits. Okay, it wasn't 2 days, Elijah, after the Deutsche Bank admission of gold market manipulation, which is fraud. It wasn't 2 days before a list of 10 or 20 plaintiffs came forward with related lawsuits. Okay, they must have known that would come. Well, sure, it didn't stop them from doing it. Someone ordered Deutsche Bank to come forward. Someone ordered the prosecutors to pressure Deutsche Bank. I remember The Voice told me back in 2013, it was 3 years ago, Deutsche Bank is under tremendous pressure to be broken up. There are 2 or 3 legitimate segments of their business, and they need them to be saved. And what he concluded in the last few months is they don't have any viable business segments anymore. Deutsche Bank is a microcosm for the broken Western banking system. You're not going to find fractures in a Western microcosm in London or the United States. You're going to find it elsewhere for fractures in the open, forced with crowbars. So you're going to see it done in Germany. Oh my gosh. Deutsche Bank is opening Pandora's box. It's not just for lawsuits. but it's for, say, unraveling a big Italian bank. If Deutsche Bank has to dump some of that stock or bond for, say, Monte Paschi in Italy, that's their biggest bank, and I think the bank is like 1,000 years old. It's one of the oldest banks in the world, if not the oldest. You're going to see effects. You're going to see fallout effects. I think you're going to see some banks in the pigs nations break. It's not going to be Greece. It's going to be in the P, the I, or the S. Spain, Portugal, Italy. That's where the fractures are going to take place. Spain's got their own huge problem. They decided long ago they're going to, and just make national their faulty accounting for banks and carry loans at values that don't really make any sense. Ignore the mark to market and just continue on their merry way. And maybe in a year everything will be kind of cleared up. Yeah, right. Okay, here's the wild card that I think is possibly going to happen. China might be looking to put pressure on Deutsche Bank, resolve some things, break down some walls, fracture a couple markets, and then come in and say, we want this business segment to be preserved. We're going to make a new bank, Deutsche Bank 2, blah, 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 GmbH for a German corporation. We're going to make this new Deutsche Bank offspring, and it's going to be a member of the Chinese gold fix. Because we need a few out of Central Europe. Wow, that would be interesting. Then Deutsche Bank would have made a complete transformation, not just to break down the Western banking system, but to be a main agent for furthering the gold price into a fair, equilibrium, viable system with integrity in the march toward 10,000 in the gold price. So these are some of the aspects. I think Deutsche Bank is going to result in some very important banking failures in Portugal, Italy, and Spain. And when they happen, you're going to see a domino effect. It's going to be the contagion. Oh my gosh, doesn't the big three banks in France, don't they own a lot of shares in those Italian and Portuguese banks that failed, and maybe even Spanish too? Oh my gosh, looks like a week later there's a French bank failure. Oh my gosh,